Commercial Real Estate Show is brought to you by Cone Resnick, forward-thinking advice to navigate business and financial issues. Visit ConeResnick.com. By BB&T, banking, business, and commercial real estate loans. Visit BB&T.com. And Arnold Golden Gregory, a law firm that makes a difference. Visit AGG.com. And Bull Realty, when your business requires proven performance, visit BullRealty.com. And by France Media, providing exposure to the world of commercial real estate. Visit FranceMediaInc.com. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. If you'd like to know the absolute latest on any commercial real estate related subjects, check out our on-demand show podcasts. For example, we had recent shows on broker strategies, social media for business, and a show on the banking industry, which included best practices for lenders related to non-performing notes and OREO, other real estate owned, of course. You can access the shows anytime on your smartphone or computer. Visit iTunes or the show website, commercialrealestateshow.com. Well, today we're discussing the U.S. office market. Please welcome my next guest, Mitch Roschelle, U.S. real estate practice leader with PwC. As a member of the PwC network of firms in 158 countries and more than 180,000 people, PwC U.S. helps organizations and individuals create value. They're committed to delivering quality in assurance, tax, and advisory services. Mitch Roschelle, thanks for joining us today.
My pleasure, Michael.
Well, Mitch, we were talking about the sales volume last year with the previous call, and just where was the volume for office sales in 2012, and what do you expect moving forward?
Yeah, let me talk about some of the markets that had greater volume than others. And one of the ways we've been at PwC measuring transaction volume is not by dollars, but by square footage. And the reason is there'll be one or two mega deals sort of across the country in dollars that will skew all the statistics. So I think that using square foot as a standard of measure as opposed to a dollar just seems like a better way to cut it. But there's a theme. If you look at the bigger markets in terms of volume, you've got Denver, where over 15% of the square footage traded, similarly in San Francisco, similarly in Houston and Dallas. If you go to some smaller markets, you have Minneapolis, Charlotte, and Seattle. And then in even slightly smaller markets, you have Austin and San Jose. Austin was the big winner with almost 18% of the stock trading. The average across all of the markets that we look at is 8.6. So if you think about it, those are the places where investors see continued rent growth, falling occupancy levels, and stronger fundamentals. So that's where the properties are trading. If you think about 2013 and what will happen then, I think it's going to be a continuation of the trends in the technology markets, the energy markets, and the job-producing markets.
Okay, and we've had pretty good performance in the office market despite the problems in the economy. Are we definitely in a full recovery in the office market?
Yeah, I think so. And the biggest reason for that, and I think I can get to that in a second in terms of specifics, is it's a supply and demand thing. So if you were staying awake in sophomore year in college for a few minutes in economics and you remembered the relationship between supply and demand, I think that's what's driving it. We're certainly creating jobs in the economy. The headline numbers about job growth have been fairly consistent month after month in terms of having 100,000 or more jobs being created. What's interesting about that job growth is where. And the where is office-using jobs and service sector jobs. It's not manufacturing jobs. So I think there still is a lot of room for job growth in the economy to replace all the jobs that we lost in the Great Recession. But the office sector and the service sector, which is a big component of the office sector, is really where we're seeing all of that job growth. So there's the demand side of the equation. The supply side is the fact that we haven't really added to office stock in quite a while, and I'll get to that in some specifics. But one of the tools we use at PwC is something we call the real estate barometer. And what we do is a forecast of, in this case, 2012 through 2015. We look again at office stock in square footage, and we look at the four stages from expansion to contraction to recession and then to recovery. Looking at 2012 and beyond, you can see that we're falling out of the recessionary phase, and we're clearly in the expansion phase, and more every year of the office stock goes from a recovery to sort of a full-out expansion. Expansion meaning speculative office space being brought to market, perhaps as soon as late 2013 into 2014. I don't suspect it will be total spec. I think it'll be well pre-leased, but I think we're going to start seeing the needle moving in terms of addition to office stock across the country.
Right. And the slowdown in new construction, so that's really helped the office market, hasn't it?
Yeah, absolutely no question about it. Just sort of on that point, we're at a multi-decade low in terms of addition to supply. We went back as far as 1985, which is about when reliable data started. And if you look at the additions to supply, back in the late 80s, we were adding, hundreds of millions of square feet of space. As we got into the savings and loan crisis, that slowed down dramatically. And it wasn't until the mid-90s that you saw a real slowdown in supply. But then it picked up again. Right now, in 2012, the forecast is for about 9 million feet of space coming online. 2011 was similarly. 2012 was higher, but again, a lot of that was stuff that was in the pipeline that needed to get done. But when you're only adding a relatively small percentage of new stock and those jobs are being created, that's the perhaps perfect storm in a good way for rent growth and occupancy pickup. So I think we're right there right now, where if you look at 2013 into the crystal ball, short of something catastrophic happening in our economy, I think you're going to see a nice bounce back in rents. But it will be market specific. There's no question about it.
Right. That's a good point, Mitch. Well, what do you expect to see for cap rates, and what have you seen this year, and what do you expect to see moving forward for cap rates for office properties?
Cap rates are very close to where they were pre-crash. If you look at the office cap rates from CBD office space as well as suburban, I'm going to talk about the difference in a second, but we're at a cap rate level, and this comes from the PwC Real Estate Investor Survey, which we publish quarterly. What's unique about it, what's different than some of the other data sources, is that it's more forward-looking. So we're not looking at actual closed transactions in the trailing 12 months. What we're doing is talking to our survey participants and asking them about expectations of cap rates going forward. So it's a little bit different, and I think it's more of a barometer or a sentiment index, if you will, for where cap rates are going directionally. But cap rates are 675 or so for CBD, and that's across all the markets, and about 740 for suburban. And there's a high correlation between the downward trend in both suburban office and CBD. A lot of folks feel that suburban office is sort of the stepchild of the CBD offices, but the fact of the matter is well-tenanted real estate is going to be attractive to investors because it's a predictable yield, and there's this massive chase for yield that's going on in the capital markets that the real estate asset class is benefiting from.
Right. That's a good point. Well, what's your 10-second answer to what is the biggest risk for the office market moving forward?
A major reversal in job growth would be my 10-second answer in 11 seconds.
Okay. Well, Mitch, thanks for sharing your perspective with us today.
My pleasure, Michael, as always.
For more information from Mitch and PwC, visit PwC.com. Well, after a quick break, we'll talk to two industry giants in the U.S. office market. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back.